All right, welcome back to another episode of the Paper Stack Podcast. I'm Rick Allen. This is Brett Burky, and today we've got a very special guest, somebody I've known since pretty much I got into the note industry, and he's been in the industry a long while. So really excited. He's got a lot of different projects he's working on right now, and he's got a lot of knowledge from just everything he's done up to now. He's probably forgotten more about notes than I actually know. So this is it's a real treat for us. We want to welcome to the show Bob Repass from Colonial Funding Group and from Note Expo, Note School. Am I forgetting anything?
Well, you forgot Notes Direct, but I won't point that out for you.
How could I forget Notes Direct? Bob, it's so good to have you, man.
Well, I appreciate it. I've done several of these in the past few weeks about Note Expo, and they always start with he's been around a long time and a long while and all that kind of stuff. So I appreciate you not making it too long of how long I've been into the industry here, but I have been in the business since 1990. So I have seen a lot of the ups and downs and cycles. So yeah, we're excited that Note Expo 2021 is right around the corner. And 2021 has been a very interesting year.
It definitely has so far. And, I want to touch a little bit on Note Expo in a little bit and let you kind of tell us what we can expect and where folks can sign up. But, you mentioned, did you say the 90s you got into the business? Is that when it was?
Yep, I started in 1990. I left a job as a vice president at a bank and decided I'd get into the secondary market and discounted note space. And I worked probably the first 20 plus years with various institutional investors. I started out with Metropolitan Mortgage and Securities that was based out of Spokane, and I opened up a East Coast office for them in North Carolina. And then in 1997, I moved to the great state of Texas, been here ever since. And I went to work for the Associates. And I worked with them until 2001 when Citigroup bought out the Associates. And then I took an opportunity with Bayview to start a division for Bayview here in Dallas. And I worked with them through the 08-09 crisis, turned our acquisition shop into a servicing shop. And then about 2012, it was the servicing piece, although there was a lot of moving parts. It wasn't really the deal making that I liked. So I joined Eddie Speed over here at Colonial Funding Group, started our capital fund, and been here ever since. And 8 years ago, we started Note Expo. So that's it in a nutshell.
Has it been 8 years? Wow, that's.
Were we at the first one?
Yeah, I've been going to. I've been with. I mean, we joined. We joined Eddie, and we met Eddie at the 5-Star event, and so that was probably in 2012 or 13. So I believe we were at the first event, yeah.
How'd you run into Eddie?
Well, when I was at Metropolitan, Eddie was brokering deals to Metropolitan, and I didn't deal directly with him, but I got to know him. And then when I moved to Texas and worked with the Associates, I started doing a lot of business. So we would sit across the different sides of the desk, and you know how Eddie's a horse trader, so I'd have to do a little trading on the notes here and try to he'd tell me how good a deal was, and I'd tell him I can't buy it right now, and we'd do a little back and forth. But I bought tens of thousands of notes from Eddie over that time frame. So we developed a good relationship, and it's always interesting story that when you can be a counterparty and do business with each other, but then you still have enough of a relationship where one day you can work together, whether it's within the same company or just kind of doing joint ventures and stuff. It's, there's really no competition and stuff out there per se. It's more like building the relationships and figure out a way that one day your synergies will connect and you can figure out a way to do business together. That'll be a win-win for everybody. So I've been with Eddie now since 2012. And like I said, we started our capital fund in 2013 and we're on the third iteration of that. So we've grown a lot, and he's continued to get Note School going and teaching the note business to a lot of investors across the industry. And we're excited.
That's cool.
That's awesome. So your note fund, you have something open. Folks can come in and invest with you guys and allow you to sort of run quarterback, take advantage of your years of experience. Is that about right? How do they go about, finding out more about your guys' fund?
Yeah, you can go to colonialcapitalmanagement.com. It's a accredited investor fund. Certain parameters. It's an open-ended fund, so there's lockup periods and minimum amounts and so forth. Pays quarterly preferred returns, and so it's we're primed right now because we feel like there's going to be a good opportunity as we wrap up 2021 and we enter 2022 as far as some inventory that's going to be coming to the market. I know we're going to be talking a lot about that, and you and I have talked about it in the past, just how non-performing loans and kind of got put on hold because of the pandemic and the moratoriums. And what a lot of people don't realize is there were several million delinquent loans before the pandemic hit.
That's it.
Right. And, we refer to those as like legacy assets because they were going to foreclosure or they were going to be sold at the time. And then the pandemic and the moratoriums hit, forbearance plans. And now that those have expired and things are starting to loosen up, all of a sudden you're going to see an initial wave, I think, of those loans to get pushed through the system. And we've already seen Fannie and Freddie, announce some sales for this quarter of the year. And we're talking, I think Fannie's was over 11,000 loans. So that's just one particular pool of loans that they're putting out. So that just gives you, I don't want to say tip of the iceberg. I don't think it'll be quite as bad as 08, 09. And we can get into the reasons why, as far as equity positions as opposed to underwater back in the day. But I think we're going to see a pretty steady flow throughout 2022 of both non-performing and some reperforming loans where people did do a forbearance plan, come back up on their feet, and people looking to recapitalize and maybe move some of that off their balance sheets.
Yeah, I agree. I've kind of, like you said, we've been talked about it, but I think that the real big missing piece that a lot of people don't see is the legacy stuff. Because I know personally for stuff that we've got under, in our fund, we had stuff that was knocking at the courthouse door. We had judgments or we had sale dates, and COVID hit and just stopped them on the dime. And when they're owner occupied, Cook County was saying, we're not foreclosing on anybody that's owner occupied right now. You can't put them out. So it's good to see that stuff moving through. But yeah, I agree. It's going to see some an increase in the inventory.
What's going to make the change happen in 2022? I'm just curious
Well, I think people are going to look to, move some of this off of their balance sheet in one regards, because even though the moratoriums are lifted, some of the bigger guys, the Wells, the B of A's, Fannie, Freddie,
they can't.
They don't want the headline risk of being the guys that started the foreclosure piece, right?
Okay.
I mean, it's a fine political balance to where, they've got investors to protect, obviously, but, they will be right at the front page of, Wells starts foreclosing on millions of homeowners. I mean, they don't want that kind of publicity. So they'll push it down, for lack of a better term, the food chain, which will go to a hedge fund. The hedge fund will sell it to smaller capital funds, depending on the size of the loan, how long it's been delinquent, the value of the property. And it makes its way down to, smaller capital funds like us. And then in turn, we use our platform and your platform to get it down to the small one-off investors that can really work with that homeowner, because, I think a lot of people think, everybody wants to buy an NPL so they can kick the person out of the house and get the property back. And that's not the case.
Mm-hmm.
I mean, if you buy it at the right price, good discount, you can work with that homeowner and make it, let them retain home ownership and still make a good deal for you and your investors.
Yeah, that is
interesting.
Headline risk is key, isn't it? Do you feel like they sort of learned this playbook from the last one, the last meltdown, the 2008, and sort of, okay, this is the playbook. We push it down. We can't have the headline risk. We don't want to be the administration that forecloses on America. Let's just kind of send it down the
pipeline.
Send it down the pipeline.
Well, I'd like to have the confidence that historically we all learn from our mistakes, but I've seen a lot of people make the same mistakes over and over again. Like, they're not subprime, but we call them non-QM loans. So Yes and no. I mean, I still have seen things like, really, we're doing that all over again.
Yeah.
But I do think from a reputational risk that you're right. I think a lot of people are, I'm not going to be the one that is going to be the one who forecloses on folks. And just because we buy non-performing loans as they come down the waterfall doesn't mean we're going to be the ones who foreclose on them either. Like I said, I think we're going to do a better job of giving them the opportunity to truly stay in their house, as opposed to, like I said, when I was at Bayview, we switched completely from an acquisition piece to a loan servicing piece in 08, 09, and it was AMP modifications and short sales and all that kind of stuff. And we did all we could to help the people, stay in their properties, but it was HAMP was a government program, so there was a lot of paperwork, and there was a lot of people that should have been modified but weren't because they didn't send in the right paperwork, or they got caught up in somebody's phone tree and never got an answer back, and they faxed it and it didn't come through. And once those loans went down to somebody who could really wrap their arms around it and work with the borrower, a lot of those did get resolved. So I think you're going to see that again.
What made I mean, I imagine you were a big part of it. What made the Bayview go from acquisitions to loan servicing? Was it just the opportunity, or was like, look, we've got a lot of NPL we need to deal with, and it sort of evolved, or was it a kind of a strategic pivot?
Well, it was really out of necessity, because the model at Bayview at the time was securitizing our loans. So we ran into a liquidity crisis.
That makes sense.
We couldn't securitize our loans anymore. That market dried up, and it took about 12 to 18 months for the executive team to kind of restructure that. And they opened up basically a capital fund, did deals with Blackstone and other large private hedge funds that, from Wall Street, and got recapitalized. But at the same time, saw the opportunity in the loan servicing world, not only to service the book of business we had in our securitizations, but to do so for other, larger institutions that maybe wanted to peel off a piece and have somebody else service it. So Bayview is buying loans every day still, and they're a big loan servicing shop as well. So they made it through, reinvented themselves, as we all like to say, and found the market opportunities. And they're doing their thing, and on a smaller scale, we're doing ours.
How involved were you with the servicing side of the business while you were there? I mean, were you knee deep in the servicing, or more on the acquisitions?
At the very end, it was knee deep in the servicing. Initially, it was mostly acquisitions. We did service the seller finance assets that we bought for Bayview, so we had our own servicing piece all the time here in the Texas operation. But we had over 150 employees in loan servicing when I left in 2012. Like I said, we had gone through all the different kind of government AMP programs, the different proprietary mods that could be offered. And that's basically underwriting a loan, when you're doing a loan modification. So it wasn't rocket scientist to transition a lot of the personnel into that. And as you guys know, Dallas is a hotbed for loan servicing.
Yeah.
There's a lot of operations here. And, the upside is if you need good help, you just pay a little bit more than the guy down the street. You can find and recruit some good employees. Nice. Bad news is they'll do the same thing to you when they have an opportunity.
That's right. So you got a soft spot in your heart for all the servicers out there, huh?
Well, more so than some people, because I do know how it is. And it's servicing is a tough business, and I get just as frustrated as any other note investor with some servicers. But believe me, I haven't been on that side. I do have a little bit more of an understanding and a little bit more experience where I can kind of help and say, hey, how about if we try this, and maybe we can make something happen. I've seen that work in the past, so it's been pretty good. We use 3 or 4 loan servicers with the assets that we own, so we don't have all our eggs in one basket, So we try to mix it up a little bit.
What is HAMP? Just so I understand what that is.
HAMP was a government loan modification. It was a home affordable modification program. It's where somebody had to qualify back during 08, 09, submit a hardship affidavit, tell them what their problem was. And the government basically had an incentive program for both the borrower and the servicer for doing a HAMP mod, that if they stayed current for 12 months and the borrower got a financial incentive, and so did the servicer. So it was a successful program, but it also led to a lot of institutions doing their own kind of modifications because, people couldn't qualify all the time for HAMP. And, there was a little bit stringent, but the good part I always thought about HAMP is it gave a framework for all the investors and kind of like what to work around as far as how to structure a mod. So it worked out pretty well.
Is that very different than the hardest hit fund, or kind of like in the same ballpark, I guess? Or?
It was in the same ballpark. The hardest hit fund was another government program that
for states.
We all have our opinions on how successful it was. I would say the hardest hit funds was a precursor to the emergency rental assistance program that we have right now. Mm-hmm. Okay, it was a good idea by the federal government. However, they gave all the money to various states to implement on a state and local level. So then they had to set up 50 plus ways to distribute money. And some states excelled at it. And there's some states today that haven't given away all their hardest hit funds money. And we're seeing the same thing with the emergency rental assistance. I think it's over $46 billion that's been allocated, and they may have distributed $5 billion through the end of July.
Wow.
So, when you give it to the states and the states can't figure out how to give it to the people that need it, whether it's the tenant or the landlord, it's just been, as we like to say, a cluster.
Yes.
Yeah.
It definitely has. Wealth of knowledge. So Note Expo, we've got that coming up November 4th, 5th, and 6th. The opening night's the 4th, right?
Yeah, the actual event starts Friday morning on the 5th and 6th. This is our 8th annual Note Expo. So Eddie and I started this back in 2014. And it's evolved. I know you guys have been a part of all of them. We always appreciate your support. And I'll give you guys at PaperStack a little free plug. Thank you for being our tote bag sponsor this year.
Yeah.
Yes.
And we're looking forward to having you guys there. And I think there's going to be a few interesting topics. Eddie's going to do a presentation on that frustrated landlord piece about the emergency rental. And do you really still want to be a landlord, or is the note space maybe an answer for you? We're going to have a couple panels on the non-performing flow of inventory, along with due diligence and asset management. So we've got some really good experts from across, people that have been in the business since before the 08, 09. So they went through that cycle, and now they're getting ready for this cycle.
Wow.
And Rick, you're going to join me on a panel about digital platforms, the good, the bad, and the ugly.
That's right.
And I guess the timing couldn't be any better, because a lot of people have invested a lot of time, energy, and money, especially into platforms like Facebook and Instagram. And then all of a sudden, I don't know, it goes down for a day. and what happens? So how do you protect yourself? So we're going to have you and a couple other folks on there just talking about how they've used LinkedIn, how they've used videos, podcasts like this, YouTube, and just ways to brand and promote your business, but yet, protect yourselves, especially in this cybersecurity sensitive market. So I'm looking forward to moderating that. I know you'll be joined by Fred Rui and Fuquan Bilal and Dave Putz, and everybody's active on Facebook or Instagram or Twitter, websites and YouTubes and stuff. So it's going to be really good. I'm looking forward to you guys sharing some wisdom on that.
Yeah, it's I love Note Expo. It's really a great experience. Just you get there and you actually have real note investors that you're talking with. That's always been something that we really love. Watching it grow, it's just how it's been great. It's a fantastic event. So this year it's at the Hilton, right? Is that right? The Hilton, the Airport Hilton.
It's actually at the
Hilton or the Hyatt?
DFW Embassy Suites, which is technically in Grapevine, Texas. Which, if you've ever been to the Dallas-Fort Worth area, as soon as you get out of the north exit of the airport, you're in Grapevine. So this is literally a $5 Uber ride. Well, it used to be a $5 Uber ride. Now it's probably a $20 Uber ride, even though it's the same place. But it's got an airport shuttle to it and everything.
Perfect.
The theme this year, guys, is Better Together. And there's been a lot of discussion about in-person, virtual, hybrid.
Yes.
This is strictly in person. We're we put the flag in the ground and said, you know what? It's just we need the community. We need the note industry community back together. I totally respect people who, still aren't comfortable with traveling and so forth. And, the recordings will be available after the show. It won't be live streamed, but we felt like it was important for everybody to make that connection, that reconnection, and get back and just, how it is, guys. We get in there and we hang out for 2 days. We like to say we just immerse ourselves in the note business, and you get to see people you only talk to on the phone or on Zoom, and you get to see people that you get to reconnect with, that you're friends with, but you just haven't got to shake hands, have a cup of coffee or a beer.
Yes.
I like it. Have to dust off the business cards. They're going to find them.
Yeah. I was very excited about this is actually going to be our first live event since
2019.
Since the last Note Expo.
That's right.
So we closed out our live events with Note Expo. We're coming right back. This one a year or 2 years later.
Yeah.
I'm really excited, and that's one of the things I did want to tip my hat to you and Eddie for kind of putting your flag in the ground and saying, hey, we're moving forward. We're going live in person. And the virtual events are good, man, but I miss the connections. I miss talking to people, and you just get so much more out of it as far as both on the vendor side, but for the attendee side, I feel like there's more connections made because, I love seeing your face here on the monitor, but I'd much rather shake your hand and, get you that cup of coffee or that beer. So we're excited about that.
Yeah, I am too.
So to sign up, if people want to attend, what do they do?
They can go to noteexpo.com, and actually you can use the promo code EXPO, capital E, XPO. So it's Expo with a capital E. And sign up today, book your hotel room. Like I said, it's at the Embassy Suite, so that includes breakfast every morning, free shuttle. Wow. It's right by it's Grapevine, Texas is a cool little town. There's lots to do in and around the area there. And at Note Expo, we provide all the breaks. All the lunches are right there in the exhibit hall, so you can have your lunch and go visit Brett and Rick in their booth and sit down and learn more about, paper stack. And look, a lot of times on the note business, it's great. We all like to say, hey, you can do it from anywhere. It's virtual. But sometimes you got to build those relationships when you have an asset that's not in your own backyard and you're engaging a loan servicer or property preservation company, or whether it's an online platform like you guys or Notes Direct, or an IRA company like Quest Trust or Equity Trust. You want that face-to-face. Who have you been dealing with? And you can vet them in person. And I think that's the beauty of it. Not to mention the great educational content we have. We're trying to give people things that they can actually learn and take home and put into action. But even if it wasn't for the content, just the ability to hang out with folks for 2 days, I think it's more than worth the price of admission.
I think so.
Yeah, definitely. So awesome. Well, we look forward to seeing you there. Want to close out with a few personal questions, just some rapid fire stuff. So when you're not slaving away on Colonial funding, Note Expo, Notes Direct, what do you do for personal fun, man? What's your life like outside of the note business?
Well, I like to travel. As a matter of fact, we just got back from Italy.
Oh, wow.
We were in Italy celebrating my 60th birthday.
Oh, happy birthday.
I know that's hard to believe. But it was an outstanding time. Angie and I spent the week in Tuscany, and my son and daughter-in-law and my daughter and her now fiance, because they actually got engaged while they were over there.
Oh, wow. That's cool.
Met us out in Tuscany for a long weekend, and they also did some sightseeing outside of the time that we all spent together. So the six of us were all together for Thursday, Friday, Saturday out in Tuscany, so we had a great time. Other than that, I hang out with my dog, sit around the swimming pool, huge football fan. I guess I can brag right now. The Cowboys have at least started out pretty well.
They've done well.
We'll see if it keeps up by Note Expo, if I can still say that. So we enjoy watching football and just hanging out. So
you're a big baseball fan too, right?
My wife Angie and I just celebrated our 39th wedding anniversary.
Oh, wow.
So
Congrats.
60 years old, been married 39 years. It's not too exciting, guys. It's just kind of thankful for your family, thankful for your friends, and it's just continue to enjoy the ride.
And I love that. And we're friends on Facebook, and I love you You said there's just 2 rules, and Brett and I are both men of faith. What are those 2 rules?
Love God, love people.
That's
I like
it,
that.
man. I love it. I love
really
that. Bob always puts out some good stuff there, and it's.
Yep.
I'm glad that you're going to be moderating that event because you're definitely active on Facebook, and I love the stuff you're publishing.
Yeah, I would have said you were a foodie too, because I see sometimes you always have some really nice food. I'm like, wow, that looks really good. I don't know where.
Yeah, we do enjoy food. As a matter of fact, when we were in Italy, we did a cooking class, so that was
Cool.
Oh,
some homemade pasta and stuff. So that was really interesting. So yeah, that's a good point, Brett. I would unofficial foodie.
What kind of pasta did you make?
Gnocchi.
Gnocchi. Wow. Okay.
Yeah, so I was interested with the potatoes and the egg
Nice.
and the flour, and not as easy as they make it look.
Yeah.
But we did that with some sauce and some eggplant. It was pretty good, pretty tasty.
That's cool.
Good
That's
stuff, man. Give me a book. Best book you've read.
Best business book is probably Extreme Ownership.
Okay.
By Navy SEALs Jocko Willink.
Mm-mm.
So I've read that a couple times. That's probably one of my favorite books. And I guess Old Man in the Sea. I've probably read that 10 times. Ernest Hemingway is just perseverance and, get up every day, do what you got to do. And, a lot of people say, oh, I don't know, but then it's only like 100 pages. So most people I tell read Old Man in the Sea, really enjoy it. So if you haven't read it, you should. And if you do want a good business book, I like Extreme Ownership.
I've got Extreme Ownership, and I read Old Man in the Sea. I guess it was probably in middle school or high school. So I think it's probably time
Read it
to
again. It'll mean a lot more now that you're older.
Yeah.
revisit.
I was recommended that one in Acres of Gold, and I read Acres of Gold, and I didn't read that one. I actually need to revisit that.
All right. Well, last thing, closing thoughts or advice for new note investors coming into the space. If you could go back and tell yourself something, some piece of advice for note investors, what would it be?
Well, I'll make a shameless plug by saying come to Note Expo. But the reason I say that is, look, this business is all about relationships.
Mm-hmm.
Okay, I started in 1990. Just to give you guys an idea, when I worked at Metropolitan Mortgage, I worked in an office in North Carolina, but my closer and processor was Tracy Z. Rui.
Oh, wow.
So I've known, right? And then Melissa and Sheila from Allied worked at Metropolitan.
Oh, wow.
And then Fred Rui came and worked at Metropolitan. So I've known those folks forever. Like I said, I met Eddie back in the 90s. I still get deals referred to me from people that I cold called and sourced back in 1990. So this business is all about relationships. You can't make them any better than face-to-face at an event like Note Expo. But I did a presentation at Note Expo a few years back, and it was entitled Relationships Over Transactions Always. So it's always about the relationships. One deal, some deals go great, some deals go bad, but you got to respect each other, make it right, and you'll be in the business a long time if you do that. So my advice would be always put relationships above everything else.
Love it.
That's good, man.
Yeah.
Bob, thank you so much for joining us today. It's like I said, it's been a real treat. I was really looking forward to this when we were able to put this on the calendar. Really excited for Note Expo. Guys, if you haven't signed up for Note Expo, you need more information, go to noteexpo.com. It's worth the investment. It's worth the money. You definitely want to be there, and it's an in-person event. And, if you haven't been to the great state of Texas, if I didn't live in Florida, I'd live in Texas. That's all I can say. That's
There you go.
That's it.
Yeah.
So, well, I appreciate you guys having us on, and I look forward to seeing you guys, particularly at Note Expo, and getting to hang out and share some good times. So I hope to see everybody there. NoteExpo.com, promo code EXPO, November 5th and 6th in Dallas. And Brett, Rick, as always, my friends, appreciate it.
Yep.
Bob, take
Thank
care,
you.
man. We appreciate it.